let's talk about your financial portfolio and let's help you achieve all your financial goals. I have with me Anil Rego, founder, CEO, Right Horizons, who will help you with all your financial goals, strategies. Anil, hi, good evening. Welcome to the show. Anil, I also will be taking Shravanti's question. I think I have someone on the phone line with me who wants to ask the question on Shravanti's behalf. Is that right? Hi, good evening, sir.
Yeah. Hi, good evening, madam. My name is Murthy. I'm Shravanti's father. Yeah,
Sure.
she has gone
All
out.
right.
That's why I'm taking the this question.
Not a problem,
Yeah,
sir.
okay.
Not a problem.
Thank you. Uh, she has quant large. She invested 2 lakhs in quant large and mid cap regular growth. She's incurring. She has already incurred about 5% loss. Is it the right time to switch and move to another HDFC, switch into a fund or similar fund?
Sure. All right, so we'll just figure that out for you. That's just one fund we're talking about.
Yeah.
She doesn't have any other fund in the portfolio, is that right?
Yeah, that's right. In quant,
And
she
when she
doesn't
put
have.
that money, what was the time horizon? As in, she was looking for a 3-year period, 5-year period. The investment horizon was for how
It is
long?
it is about for
Sorry?
2 to 3 years. 2
Two
years.
to three
She
years.
has
How long
invested
has
about
it
two
been
years.
so far? So
2
far,
years.
how long has it? 2 years already done? Okay.
Yeah.
Okay. So Anil, a loss of 2% right now, as per the current value in this fund. Would you recommend an exit, or you just would recommend a new investment in some other fund right now?
Yeah, first of all, let me step back and say some of this is important things to look at because we chased returns and quant was doing very well in that period of time. It was giving excess returns, and maybe we've invested into a fund like this. Now, what do you keep in mind that many times when you have excess returns, they also come off, and one needs to try and understand how risky is the fund, what risk are they taking versus some other fund, right? So I think from that point, quant has always taken a higher level of risk to deliver that higher return. And so it's not surprising when it comes off, then it falls more. So one or two points to keep in mind. One is maybe doing a systematic investment or systematic transfer is a good way to do it. And ideally, don't not necessarily chase the highest returning fund. Look at also the risk involved there. And even if you have a lump sum, you can do a systematic transfer and invest it over a period of time, right? So coming back to this quant large and mid cap fund, I think I already mentioned that's a higher risk fund, and for her profile, I don't think it sort of makes sense. Okay. However, in the short term, it's already down. One way to do it is to say, okay, let me wait for a bit of a market uptick and upturn, and then book profits and exit there. Definitely, I would suggest an exit over the medium term. An alternate fund that one could look at in the same category as say an ICICI through large and mid cap fund, which would have much better sort of risk metrics as well as being a consistent performer.
All right, so that's a solution or recommendation for Shravanti. Let's take Leslie's question. And I don't think I have him on the phone line. Do I have him on the phone line? Okay. He says he's 61 years old from Pune, 10 years investment plan and holding for 1 year. ICICI Manufacturing Fund 20 lakh for 1 year, down by 45,000. He's also holding ICICI Multi-Asset 15 lakh, ICICI India Opportunity 15 lakh, Nippon Small Cap, HDFC Balance Advantage, HDFC Flexi Cap. Would like to reallocate ICICI Manufacturing Fund to some other fund. Okay. Anil?
Yes, so this is another, again, I'm stepping back here and looking at it because he has a very high exposure to thematic funds, 47%. So what is the learning from a situation like this? Thematic funds are good for investors who can, time the market and time entry exits into the particular theme or a sector, right? So manufacturing has done pretty well, and that's one of the funds he has. Okay, so I would suggest that, anyway, he would also like to look at it. Now, again, one way to exit is to say the sector is likely to do well, so can I wait for a little bit of an up move and then exit, in the so that can be one, but definitely that is something that he could end up looking at making a change out there. Okay, so in fact, the other fund that I think he has another thematic fund. Okay, so there also, he can end up looking at it because I think ICICI through India Opportunities Fund is a fund that he can also watch and see whether he wants to reduce over a period of time. Um, I think he already has a good set of funds, but maybe the recommendation I would suggest is a HDFC FlexiCap. Is a fund that he could sort of get into when he gets out of, let's say, the manufacturing fund. And over a period of time, maybe at that point of time, whenever he wants to exit, I think it's good to relook and possibly even say looking at a large cap fund is also an option that he could consider over a period of time, when he exits say, the ICICI through India Opportunities Fund.
All right, let's move on. I have Abhishek on the phone line with me. Hi, Abhishek. Good evening.
Yeah, good evening, ma'am. So,
Okay, yeah. Tell
yeah,
me.
ma'am. Yeah, tell me, ma'am.
You have 20 lakhs
Hello?
lump sum, wants to invest in mutual funds, and
Yeah,
uh, okay, and this is for your son's education, 15 years time horizon. You want a flexi cap, large cap, you want a mid cap, multi cap, and a small cap, and you also want to, you are expecting 15% in terms of returns, and you have gold already
not
invested.
15, ma'am. It's like 12% because after seeing, then I felt like 12% would be which
Sure.
I can expect.
Much more realistic. Yeah, yeah.
Yeah.
Okay, so you're already investing in gold. So now it's just mutual funds that you're looking at. Okay, first of all, congratulations. Right step in the right direction for the right financial goal. And let's help you park 20 lakhs for 15 years for your son's future. Anil.
Yes, so I think it's a good thing that you realized and you said, okay, let me look at a long-term return of 12%. I always tell clients have a moderate, expectation. If you get better, it's always good. So definitely because even if you look at a long term, the index has delivered, 13%. So that is something that for you to sort of keep in mind. Coming back to how you can invest this lump sum that you have of 20 lakh rupees, I think you can do a systematic transfer rather than putting it off into, equity straight away, at least for the mid and small cap funds. Now, in the large cap, segment you can look at, or you can even look at a large and mid cap. I would either do an ICICI blue chip in the large cap or, ICICI Pro large and, mid cap fund. So that is something that you can do in one of those, depending on your risk appetite there. Okay, because you're also saying I want to look at 15 years. HDFC mid cap opportunities can be looked at in the mid cap. On the flexi cap, I would suggest Parag Parikh flexi cap fund and Nippon India small cap, the small cap category. The point that you need to sort of keep in mind is as you're coming closer to your end objective and your goal, you need to start de-risking, slowly start moving it into at least a hybrid fund or a balanced advantage fund. And when you come within, say, 1 year to 2 years, start moving it into debt so that you're not hit by market cycles at the time when you have your requirement.
Okay, I think with that, Abhishek, I hope you've got all your answers and all the best with your investments. Anil, it's time up on the show as well. Thank you so much for being a part of this show and helping our viewers with their financial portfolio queries. And for our viewers, I'm going to leave you with our WhatsApp number and email ID where you can send across all your questions and we can help you align all your investments to your financial goals. Thank you so much for watching. Goodbye.